Perfect. For me, it's yeah. For me, it's the same. I can see you. I can hear you, and so I'm happy to see you after many years again.
Yes.
When I'm right, we met the first time shortly before the Asian financial crisis, and that was really an interesting moment.
Yeah, that was quite a moment.
Yeah, because I think we met 2 or 3 times. Once in Baden-Baden at a financial markets meeting, and this was during the financial crisis, and this was a difficult time during that time for investors in emerging markets.
Yeah, that's for sure. That was quite a big shock to the whole system.
Yeah. So, but therefore, I'm very happy that we have the opportunity today to talk a little bit about emerging markets, because for me, you are really maybe the most experienced investor in emerging markets, because I think you started in 87, 88.
That's right, 87.
And I became in 89. I became an investor in this closed-end fund Templeton emerging markets.
Oh yeah.
And so today we have many investors that are raising questions about emerging markets, about risks, about opportunities. So especially for investors here in Europe, when it comes to emerging markets, they think about opportunities in China and India, but we have risks there, like political risks in China. What is going on with these tech companies in China, and I'm very glad that we have the opportunity to talk about this subject. You see, I know you very well, but I think in the first it would be nice for those people who are listening and that don't know you that well, that you make a short explanation, introduce yourself shortly for what you did in the last 10, 14 years.
Well, as you know, as you mentioned, we started in 1987 with the very first emerging markets fund listed on the New York Stock Exchange. That was the Templeton Emerging Markets Fund. Mm-hmm. At that time, I was working for Sir John Templeton. It was based in Nassau, Bahamas.
Yeah.
And when we started the fund, I happened to be the head of the International Investment Trust in Taiwan. In Taiwan. And I told John Templeton, look, if we're going to do emerging markets, I've got to open an office in Hong Kong, because that's one of the few offices where we can, invest. So I opened up the office in Hong Kong, and we started investing. In those days, there were only 6 markets where we could invest. At that time, it was Mexico, Hong Kong, Philippines, Singapore, Malaysia, and Thailand, I believe, at that time. So, but then I started building up the list of the investing companies, and I started increasing the organization because the amount of money we were managing was growing. Then in 1993, Franklin Resources purchased Templeton. And that made the organization much larger because Franklin was a tremendous sales organization. So our assets grew very rapidly, and I had to keep on adding analysts. So I opened an office in Korea, and of course we had the office in Hong Kong. Then I opened an office in Thailand, in Vietnam, in Malaysia, in Singapore, India, Turkey, South Africa, Brazil, Argentina, Poland, Russia. So we were all over the place.
Yeah. And
had over 60 analysts around the world. And our assets grew to over $50 billion at one point. Then 3.5 years ago, I decided that it was time for me to try something different. So I broke off with Carlos Hardenberg, who also left Franklin Templeton, and we started a new fund, actually 2 funds. One is listed in London. Again, it's an investment trust, Mobius Emerging Markets Investment Trust. And the other one is an open-ended fund in Luxembourg. And now it's been 3 years. And luckily, we've had a terrific track record. We're now, last year, we were the top emerging markets fund of all, something like 2,000 emerging markets funds listed by Morningstar. So we're really on the way. I'm living in Dubai. Carlos lives in Germany. We have an office in London where our analysts are, and we are operating very nicely despite COVID. I'm able to travel from here to some countries around the world, but as you know, most countries are closed because of the quarantine. But now we're in good shape and we're growing very rapidly, and we're getting more and more investors because the performance has been good. So I'm a very happy man at this stage.
Oh, perfect. But I think that's a good starting point. You were just explaining that, of course, also not just the United States and Europe were facing many, many difficulties regarding these COVID pandemic. And also, I think in Asia, it's a big problem because the economy is partially locked down. And still you cannot travel. Hotel industry is difficult. So and if you would start today investing in emerging markets, so what would be for you the biggest opportunities and the biggest threats on the other side?
And the biggest opportunities are in all of these emerging markets. The growth is much faster than the US or Europe. So that's the biggest opportunity because you're dealing with very rapidly growing countries. Even China, which has slowed down, is still growing at something like 5%, which is very fast growth for an economy that size. India is growing at much, much higher than that. And we're seeing countries around the world, in the emerging world, growing very, very rapidly. And their capital markets are growing as well. So we're getting more and more companies being listed in emerging countries with great managements. So there's lots of opportunity. We really are very, very lucky to have this incredible list of companies in which we can invest and choose from. That's the great opportunity. The great threat, of course, is an upset in the global financial system. So, for example, I would say really the biggest threat that we face now is some interruption of the internet system globally. Hackers and other people interfering with the internet and breaking communications and interfering with certain strategic things such as power or water or military encampments and so forth. So that's a big, big risk. But that's a risk we all share.
I think this is a risk that we have globally in every country when there is something happening to power systems. It doesn't matter if it takes now in India or if it happens in the US. But I would like to go a little bit deeper into China, because you see China is a growing market. It's a growing consumer population. So we have more and more people that have money, that have wealth. But in the last 18 months, we saw a little bit a kind of clash between business and politics. So how do you see these future developments, especially when it comes to these very successful tech companies like for example Alibaba or Tencent?
Yes. Well, first of all, we must say that China cannot be ignored. It is just too big. So China will be there and will be a target for investment no matter what happens. There's no question about that, unless, of course, the government decides to abandon the market economy idea, but I doubt if they'll do that. As regards to what's happened recently, the downturn in the Chinese market has affected the emerging markets index. As you know, the index consists about 30% of Chinese stocks. And that has changed sentiment because if you know, a lot of people are buying index funds or ETFs, exchange traded funds. So when the index goes down, people say, oh God, emerging markets are over. but they don't realize that China is going down, but India is going up.
Yeah.
So that's why you have to be very specific. But even with China going down, it is a temporary situation. And I believe the moves that the Chinese government have made are actually going to be quite beneficial to the market.
In the longer run.
In the longer run, because what they're doing similar to what Europeans have done, what America has done, is they're going after monopolies.
Yeah.
The companies that dominate a certain sector, like for example, Alibaba dominates the sector. And in fact, I would say the Americans have been a little bit behind in enforcing anti-monopoly laws. But China has decided, look, we've got to have a more level playing field. And let's say if someone buys something with Alibaba, and Alibaba says, the only way you can pay us is using Alipay. That means immediately you're eliminating a lot of companies that are in the payment business. So that's what the Chinese government is going after. And I think it's a good thing. And you must remember, yes, the stock price of Alibaba and Tencent and some of these other big giants has gone down.
Yeah.
But medium-sized and smaller-sized companies are actually benefiting. Because they're benefiting from a more level playing field, as I say.
So in general, you view the market in China long-term positive. And I think as it is already one of the largest consumer markets, you just have to look at some European companies. So like look at the German German motor car industry. They are selling more cars. Mercedes-Benz is selling more Mercedes cars in China than in Germany or Europe. So when you have difficulties in China, then even European companies or US companies will face difficulties.
Exactly. And that, by the way, that's a very good point you make. You know, you might even say that some of these companies in Europe and America are becoming emerging market companies. Because if over 50% of their earnings or production is in emerging markets, then they become emerging market companies.
So that's it. So this is a question because many investors are looking now to China because they saw markets in the US and Europe running very good last year, and China lagged behind a lot. So another market that you were just talking about was India. So this market was quite friendly last year. And how do you see the developments in India within the next 5 to 10 years?
Well, the developments in India are incredible because India is embracing technology in a big way in dealing with the payment systems. By the way, some banker has recently said that the payment systems, the national payment system in India is one of the best in the world, if not the best. And again, this is computer-based. And as you know, all Indians now are getting a computer-based identity card, which enables them to open bank accounts and do many, many things. So China is really moving ahead very rapidly in utilizing technology. And as you know, it's a big challenge because China is made up of states that are quite independent with different languages, both written and spoken. So unifying a country like that is quite a challenge, but they're really moving along very, very quickly and very nicely.
When it comes to a comparison long term, in about 10 years, who would be which investment would you think today? It's difficult to answer, of course, but if you have to make a decision to invest today in India, or if you have to make a decision to invest in China, which would be your favorite investments?
Well, I would say now China, because China has greater growth prospects.
And the valuations are lower.
See, they're where China was 10 years ago. So the growth is going to be incredible going forward for India. But of course, as you said, it's a very difficult question. I will not ignore China. I'm definitely investing in China as well. But I think the growth prospects in India will be better.
Okay, another market we were discussing 20 years ago, and it is another market that's not so much in the focus today. But what is about Russia? So and because we in the past I know you were traveling to Russia, and we talked also about Russia. So this economy is far more smaller than India and China. We have now these problems between Ukraine and Russia. We do not know what will happen not. So I think everybody hopes it will stay peaceful, but we do not know. So what would you do if you are thinking today about investments in Russia?
Well, currently what's happened in Russia is that the domestic market has grown very rapidly.
Yeah.
Russians are now understanding that it's a good idea to invest in equities. Mm-hmm. So the Russian market has become much more liquid and larger as a result of the domestic growth. Mm-hmm. Mm-hmm. Now, in terms of investing from our side in Russia, yes, we'll continue to look at Russia. We don't have any stock now in Russia, mm-hmm. but the big challenge that we have with Russia is the background and ownership of companies. Mm-hmm. In other words, we don't want to be investing in companies that have an oligarch controlling from mm-hmm. behind the scenes, mm-hmm. because they may be sanctioned by the US, and that would create problems for the company. Mm-hmm. So that's one of the biggest challenges in Russia. Otherwise, you have terrific managers in Russia, you have terrific companies, and the economy is strong in Russia.
Mm-hmm. I remember we once met, it was from 98, and you had valuations in Russia. It was price earnings of between 2 and 3. And I think Russia is still quite, in comparison to other markets, a cheap market when it comes to valuations.
Yes.
Do you have other areas? So because emerging markets is of course not only Asia, but I think Asia is the most important part because in India and China alone, about 40% of the world population are living in these two countries. But what other emerging markets would be of interest for you today if you look at so what's about Latin America? What's about other Asian countries?
Well, Taiwan is mm-hmm. a very big market for us. Mm-hmm. Taiwan is tremendous advances in technology, mm-hmm. semiconductors. For example, mm-hmm. Taiwan Semiconductor Manufacturing Company mm-hmm. is the largest in the world in terms mm-hmm. of semiconductor foundry work. Mm-hmm. So Taiwan would be at the top of the list. Mm-hmm. In fact, it is the largest allocation in our fund now. Mm-hmm. The other country, which is very interesting and fast growing, is Vietnam. Mm-hmm. We have an investment in Vietnam, and that's quite an interesting place to be investing. Mm-hmm. And Indonesia would be another place, which mm-hmm. is a large country, mm-hmm. lots of things happening, lots of improvements. And then if further afield, there are opportunities in countries like Turkey, despite all of the problems with the Turkish lira. Mm-hmm. You must remember that weak currency is not necessarily a bad thing for some mm-hmm. companies, because some companies are exporting, earning US dollars and paying in lira. Mm-hmm. So mm-hmm. Turkey is a dynamic economy. South mm-hmm. Africa is another place. Mm-hmm. Brazil, of course, the largest country in Latin America. And then in Africa, I would say, in addition to South Africa, Kenya and Egypt would mm-hmm. be two countries mm-hmm. to look at as well.
Mm-hmm. Another interesting topic you just mentioned was if emerging markets, if you have weak currencies, this will be of benefit long term. But before the currency becomes weak, it's a problem for foreign investors. I remember, so the starting point of the Asian financial crisis was a devaluation of the Thai baht. So it was, of course, a perfect investment decision after the depreciation to invest into. But this question, we have now worldwide more or less rising interest rates. And I remember in 1994, we had these, I think it was the so-called tequila crisis.
Yes,
where,
yes.
where the Mexican peso devalued. And then it was 3 years later in 1997 when the devaluation of the Thai baht was the starting point of this Asian financial crisis. So how do you see currency risks in this area from the perspective of an investor from Europe or the United States?
Well, of course, you have to try your best to assess the possibility of a currency devaluation by looking at things like the balance of payments, looking at foreign reserves, etc. There's a number of indicators that can give you some hint as the possibility. So that's one thing to do. The second thing to do is to get into companies where if there's a devaluation, they will not be hurt. In other words, a company that's exporting in dollars or has some earnings in dollars. So these are the two things you can do, but I would not recommend to avoid these countries because you lose lots of opportunities if you do that. You know, what I try to tell people is we don't invest in countries, we invest in companies. That's the key. So you have to look at the company in relationship to the environment where they're located.
I think that's very important. That especially in the emerging markets, it's such a huge area, so many differences, and then in the end point you have to look at every single company, and this was something I remember quite well whenever I met you. That maybe 90% of your job at Templeton was doing traveling to visit all these companies, and how important it is to visit all these companies.
Exactly.
I've now more or less last questions, and this was raised. I got this question in the last few years very, very often. So when we started to talk today, you mentioned that the growth in the emerging markets is larger than the growth in Europe and even larger than the growth in the US. And normally, if it comes to stock investments, long-term equity investments, normally you think, okay, if an economy is growing so strongly, 5 or 6%, and another economy like here in Europe is just growing 2%. Why do you don't have these long-term better performance if you compare long-term the performance of emerging markets? You see, as I told you, I'm since '89 I'm investor in this Templeton Emerging Market Fund. It has a good performance. It has a high volatility. So you have a much higher volatility than in the S&P 500, but you had good returns, but you were not rewarded the high volatility, and you were also not so rewarded when it comes to this larger economy growth. So do you see a chance one day that these larger growth rates in the emerging markets can lead us to a performance that will outperform over some years markets like US or European markets?
If you look at the performance of the emerging markets from the very beginning to, let's say, about 10 years ago, you probably find emerging markets outperformed the S&P 500. Since that time, the emerging markets underperformed. And I believe the reason for that is many of the S&P 500 companies now are gradually becoming emerging market companies. In other words, their earnings and their production is in emerging markets. So what you have to do, and that's the reason, by the way, we started our new company, because we realized that if we bought all the big companies, the index companies in emerging markets, that's not going to work. What we've got to do is be very specific and buy those companies that are going to be growing faster and having a higher return on capital. So, for example, and also take advantage of the demand in the developed world. So, for example, the stocks that we have in Taiwan depend to a great extent on the growth of demand in Europe and America, because they're producing chips, semiconductors that are used in products all over the world. And of course, the biggest market in the world is the US, and of course, followed by China.
Yeah, yeah, yeah.
So that's the reason why I think the traditional measure of emerging market performance is broken down. It's not really a good measure if you look at the index.
Yeah, yeah.
You're better off looking at specific, and that's the reason why we said it's best to invest using an active share management, not just following the index.
Yeah, I think this is one of the big differences that in the emerging markets, an purely index fund will not have the chance to bring these investment results, because emerging markets are so complex, so different that you need more or less a stock picking access to these markets instead of going into an index fund.
Exactly.
Yeah, Mark. I would like to thank you very, very, very much for this information. One last question. If you were telling about, because I think this might be for some people interesting to look at it, these fund you are running, you told there is a Luxembourg fund. So this fund would be open for investors from Germany and Europe.
Oh, yes, definitely. It's a CCAV Luxembourg fund. So any investor in Europe can buy it.
Yeah.
So we'd love to have people come on board.
Yeah. Okay, so Mark, it was a pleasure for me to see you and to speak you again after such a long time. And I wish you all the best. And maybe in a few months we can have another discussion, because young people, especially young people who have a very long time horizon when it comes to investments, they are really interested in these emerging markets and raising questions. And I think one of the best persons in the world who can answer these questions is you, because you have this tremendous experience. So Mark, thank you very much.
It's a pleasure.
Okay, see you next time. See you. Bye-bye.
Bye.
Bye.